Good afternoon, friends. Good afternoon. Good afternoon. Great day today. It's an awesome day. It's an awesome day today. A day where we all got to learn about um, the actual cut, the first cut of 2024. All right. So let me just do some change right here. We're live right now. So just give me a second. Okay, just give me a second. I'm working on. All right, now you can see me. My friends in Instagram. So, what are we here for? We're here to talk about Fed funds rates. I love this subject. I love it because the reason why I like to talk about it is because I like to make sure people understand the differences between in our language of what one and the other is. So we are lucky to see a new era being born. So in those of us who are turning the corner, I would say maybe we'll not see this ever again, um, or maybe one more time. So we are going to turn around the corner, and we're turning around the corner. So we are um, seeing in front of our eyes a new era being born, a new economy, a new economic cycle. So this is why I wanted to come in and talk about this today. Take advantage of the subject that's hot right now. Everyone is talking about it. The Feds or Fed. We many people say Feds. The reason why they say FEDS, Feds, is because there's a few there's a few um, there's a few basically a few members of the Fed. So, and those members basically what they do is they watch the economy, and they watch the economy and they basically try to see the direction the economy is taking. So, my job here is basically today is discuss with you a little bit about of what just happened today is how it's going to affect you directly, how it's going to affect the consumer directly. When are we going to see those effects happening? And let's get into the subject. So, the Fed just announced today. Mr. Jerome Powell announced today that the central bank is cutting 0.5%, 0.5 basis points. Um, Now, there's going to be a big buzz about it. There's going to be a lot of news going around. And I'll explain to you what this means. Um, Basically, there's two different interest rates um, for two different markets, um, or two different segments of the financial industry, or consumer or the economy. One is the Fed funds rate, which it is the money that the central bank lend to financial institutions so they can lend to consumers. So we call that the daily rate. So that's what it's called. The daily rate is different to the 3 to 10 years rate or 30-year rate, as is known on a mortgage. So those are different. The daily rate is what the actual um, central banks say. Let's say Bank of America, they need $2 billion, so to lend out to other to consumers. So they go to the Fed and they go, hey, we need $2 billion. So What they do is they will lend that money and they will tell them, hey, listen, our rate today is 9%. So it's 9%. But what just happened today was that actually the Fed, the central bank, they, let's say the rate was 9% today to lend to financial institutions. Uh, what the Fed did today was they said, well, we're starting a new process, a new cycle in the economy. We want the economy to soften a little bit, to consumers to soften up a little bit their burden of borrowing money. So what we're going to do is we're going to give you a discount, or we're going to discount the rate, or bring the rate down to not to 8.5. So that's what the Fed or central bank did today. They said, for you large financial institutions coming to ask for money from us, we're going to cut it down 0.5. So let's say it was 9%. So starting today is 8.5%. So that's what's known as the Fed funds rate. That's what was changed today. So now that there is a consumer rate, or the final rate that goes out into the markets, and that's something different. That's in the hands of the actual financial institutions. Those who borrow money, they have a margin that they can make, like buying a piece of product, whatever it is, anything. It could be furniture. They if you're a furniture store, you buy the furniture store for 10, you sell it for 15, you make $5. So just to give you an idea, whatever, you buy whatever for $100, you sell it for 150, you make $50. So it is the same concept in money industry or financial industry. So same concept. A lender goes to the Fed and they say, hey, I need $1 billion. The Fed goes, I'll give it to you for this amount of interest rate. They take it and then they go out into the market and they go like, hey guys, I'll give it to you for this amount of rate. Okay, this rate amount. So what that means is they will mark up the rate to make money, because that's their business, right? So because the Fed, they ended up cutting 0.5, now the final consumer rate is cheaper. Why is it going to be cheaper? It's going to be cheaper because the lenders, of course, we're in an open market. The lenders are going to start fighting for your business. So what they're going to do is they're going to go like, hey, our rates went down today, so I will give you a discount. I'll give you a promotion. If you come to me, my rate is going to be 0.5 less than this guy on the corner. Why can't they do that? Because remember, they still have a margin, okay? And the central bank gave them 0.5. So that's what this is all about. Now, how does it affect us as consumers in every aspect of our daily life? Well, let's see. Purchasing of a car, if you want to finance it, it becomes a little bit cheaper. Purchasing of a home becomes cheaper. Purchasing of anything becomes cheaper. That's why money, the term is actually money is becoming cheaper. It's cheaper to get money. So that's what this is all about. And what this does basically, it is the economy. It is the economy. Basically makes it easier for you to borrow to get the things that you need or you want. So it makes your life easier. For those who own homes right now, those who bought properties between March, I would say January of 2022, all the way up to now. So you have an opportunity now to refinance your property in the coming month and save yourself a few $100. It could be anywhere from a few hundreds to all the way up to maybe 1,000 or whatever or more. So that's what this is all about. It is about The government saying, hey, you know what? It's time to ease the economy. It's time to take the burden off your back a little bit, because we already basically achieved what we were looking for, and it was to lower inflation. So this is what's all about. Is about lowering inflation. One area where inflation has persisted is in homes, home purchasing. That's where inflation still persists. The reason why is because of the short of home production. So that's simply simple as that. As simple as that. So, um, that's basically what this is all about. So, the Fed is cutting zero point 0.5. It is expected that before the end of the year, we see another cut on interest rates, and so on. We should be moving towards a very low rate in the next 12 to 24 months, anywhere between 3 and 4.5. So that's what we are gonna be around. So, and again, that's the reason is because basically inflation has eased a little bit. The pain of inflation, things are going down. Um, so the only area that hasn't basically um, that hasn't been brought down that much is in the housing market. Um, but our governments are working on that. So, so this is what just happened today. So, um, it's a new era. It's a new beginning. It's a new economic cycle. So, what this does basically, hopefully, is not going to be hindered by anything in the years to come. What happens is, if inflation jumps higher than is suspected to be, then uh, the uh, the central bank has to kick in and basically take action. Or how would they do it? It is the same concept, by increasing rates. So we are going to pray and hope that rates are not going to jump. The inflation is not going to jump, even though it's a relation. Cheaper money creates more interest in purchasing. Purchasing creates inflation. I always talk about it. People think is inflation, and when the economy gets tough is caused by government. Is not caused by government. It's caused by consumers. So if you didn't know that, I'm breaking the news for you. You are the cause of inflation. It's not the government. So you want to stop inflation, you stop consuming, you stop buying. That's how it is. So we want to stop the rents to keep going higher and higher. Well, let's find a way to stay in homes, stay in places where it's cheaper, and make sure we put the pressure on renters so that way they know we're not going to fall for their trap. So you want to get cheaper homes? Well, let's find a way to buy in areas where homes are not, that expensive, or let's build more homes. Let's ask the government to build more homes, affordable homes, and you will see that inflation is going to ease. So basically, now the money is getting cheaper, we might jump into, let's buy a new car, let's buy a new boat, let's buy clothing. That let's buy is called, demand. Okay. And if you demand a lot of something, they have to produce more. The manufacturers have to hire more, and cost go up. It's as simple as that. People make it hard in their head, thinking that it's a cause of somebody that inflation goes out of control. For example, 2021, COVID went out of control. COVID caused inflation to go through the roof. Why? We were all sitting in our homes doing nothing, just buying compulsively buying. And when we had a chance, we look at our cars in our garage, and we thought, oh, the paint is not looking good. Some dealers were still open, or they were accepting your applications online. You went ahead and bought a new car, and it was delivered to your garage. So, and you couldn't hold it. You went to Walmart and bought more than you needed because you were anxious. So COVID caused a hyperinflation, and it's not COVID. COVID was just a pandemic. It was us, the anxiety of doing nothing, sitting in places, doing nothing. So our fingers became our enemy. Let's buy, let's buy, let's buy. And we helped a monster grow to levels like never seen before. Some of the monsters, those companies who you see out there delivering, I mean, they became a monster in the COVID era. Why? Because we ordered so many thousands of deliveries, they had to hire more, open more warehousing. It's not the cost of others, it's the cost of us. We are the reason for inflation. So the concern right now is we are moving to a new era. The government is easing or is getting money cheaper to our hands, that gives us the power to buy more. You see what I'm saying? Do you follow me? So even though money is going to get cheaper, I think we will have to find a way to practice delayed gratification and not go crazy and buy more than we can. If you have a home and your home is 3-bedroom, 2-bath, and you're only 4 in the family, don't go ahead and buy a 5-bedroom home, because it's going to be cheaper for you to buy. But if you do that, right away, home prices are going to go through the roof, because it's cheaper to buy. It will be cheaper to buy a home. So, again, what we are seeing right now, starting today, is a new era, just born. So let's take advantage of it. Let's make it work for us. So in the next few months, we're going to have a way much cheaper interest rates, way lower interest rates. Let's take advantage of them. Let's refinance our homes. All right. Do not cash out if you don't need to. That's important. Just refinance your property. Do not cash out if you don't need to. All right. But if you need to, you can cash out to get rid of maybe high interest debts, student loans and things like that. But again, the objective here is to ease your pain, to take off a little bit of the burden off your back, get a little bit of a better rate. For those waiting to buy their property, the time is starting now. For those waiting, that has those who have bought properties in the last 24 months, 36 months, it's time for you now to start thinking of refinancing. Call us. We're in downtown Orlando. We're in Pennsylvania too. So you can call us to 407-955-5223. You can go online, search and fill out an inquiry request, or a quote request. We will send you a quote, no commitment. So you simply request it from us. We will make a quote for you. We'll let you know what you qualify for. We have FHA refinancing, streamline refinancing, and that's a no cost to you. Some restrictions apply. And we have BA interest rate reduction loans too, and those are a no cost to you too. So for those veterans out there, it's time to talk to us and get those payments down and lower. We'll hear for you. We are here to help you. Let us know how we can help. Again, we're in downtown Orlando. You can find us online, www.hdhmortgage.com, harrymortgage.com. You can write to us through Instagram. You can write to us through emails online, or you can fill out a quote request form online, and we'll answer to you in less than 24 hours. So looking forward to enjoying the next few months coming up, um, and bringing you the lowest rates possible in the next few months or years to come. So once again, HDH Mortgage here for you at your service. And talk to us, call us, reach out to us. Good times are coming. They started today. So talk to you later. Bye bye, Instagram. It's great to see you guys. For those who are going to listen to this video, again, you can reach out to us through direct connection, or you can basically call us or write to us. So talk to you later. Bye bye. And those in YouTube Live, so we'll be reaching out to you too, or reach out to us. And thank you for being with us.